Hi, I'm Jimmy. In this video, I'm going to walk through, from an investing standpoint, the truth about the unemployment rate. What is it? How accurate is it? And how it affects different parts of the economy. So in a recent video I did titled, Should I Invest Now or Wait Until Later? Well, we went through different economic indicators so we could try to determine where we thought the economy might end up going. And hopefully we could try to stay ahead of a full-blown recession and then try to protect our portfolio, our investment portfolio, and try to position it the best possible way. Well, one of those indicators that I used was the unemployment rate. And this is a chart that I'd used for unemployment. This is a chart of the unemployment rate going all the way back to the 1940s. And broadly speaking, I said something along these lines. It's very low, and this is a good thing for the economy, and ultimately the bulls get a point for this being very low. Now, if you're interested in seeing that video, there's a link in the description below, and I'll be sure to leave one at the end of the video as well. Well, a flurry of comments came in about how the unemployment rate wasn't a good number to use, and that because it was low, well, that meant it was going to move higher, and once it does, well, that will be a bad thing for the economy. So unemployment being low should actually be a bad thing. And I can't completely disagree with this. I mean, just look at the chart. When unemployment starts to rise, it tends to rise in a hurry. But there are a few things that I thought could be useful to expand upon the unemployment story. First off, in that video, I mentioned leading economic indicators, and unemployment is actually a lagging economic indicator. So from that standpoint, it probably wasn't a great choice for that video. But I wanted to put it in there because unemployment and jobs in general are so crucial to the economy. So I thought it would be bad form to leave it off the video. And I think it helps to paint the picture of where the economy is right now. And it has such a ripple effect on many other indicators that it makes sense for us to watch it. Okay, so now let's get down to the truth of the unemployment rate. So my first question is the unemployment rate useful? And obviously, my answer is yes. Otherwise, I wouldn't have used it. But here's why. So this is a more zoomed in chart of the unemployment rate going back to 2009. And as we can see, it's been falling quite nicely for the past few years. Now, this brings us to a popular comment that I got in the last video, and that is, doesn't unemployment have to move higher? And the answer is yes. But the question is, when? See, the longer that unemployment stays at these low levels, the more it puts pressure on wages. So as unemployment hits lows, well, wages should rise. And while yes, unemployment will stop falling at some point, since it can't go negative, well, the longer it stays here, the more wages should rise. So when we add wages to this chart, well, we can see that this is true. So the orange line is the percentage wage increase as compared to last year. So right now, wage increases are happening at about a 3.2% rate, which is quite low, yes, but it's still increasing at a faster rate than it was last year. Now, this is an important number because increases in wages helps the economy. It plays into inflation. It gives indications about unemployment itself and indications about the labor market. So I understand that people say unemployment is low, therefore it will rise, and that's a bad thing. But it is also true that it could go sideways. What if it stayed here for a few months or for a few quarters or even a few years? If the labor market kept getting stronger because of better wages, well, that would not be a bad thing at all. Now, granted, the unemployment rate is absolutely going to move higher at some point. But I bring this up just because I want to caution investors from thinking, well, unemployment is low and there's only one way to go, and that is up. That's not necessarily true. It could continue either a little bit lower, or it could just move sideways for a bit. Now, this brings us to the real pushback that I did expect about the unemployment rate. People would say, isn't unemployment a garbage number? It doesn't account for people who are not looking for work anymore, doesn't account for people who have part-time jobs, maybe they want a full-time job, so it leaves a lot of people out, and therefore the number can't really be trusted. And this is true, but not, or at least misleading. So here's the way unemployment numbers actually work. So you start with the entire population, and then they break off a subsection, and they call that the civilian non-institutional population. Basically, it's defined as anybody who is 16 years or older living in the United States, and leaves out anybody who's in the armed forces or in jail, or maybe they're sick or in a hospital or whatever. Basically, it only includes people over the age of 16. So in theory, people that can work, that are able to work. Okay, so now we're left with the green box. So here's where it starts to get interesting. And this is also where I'm going to start using some real numbers. So in this group, well, this accounts for about 260 million people in the US. But then they have something called the labor force. So this group gets cut into two categories, those in the labor force and those not in the labor force. Now, they actually call this the civilian labor force, but we already saw why. So if you ever heard that the real unemployment rate is like 35 or 40%, this is what they're talking about. They actually call this the participation rate. So as of the end of March, the participation rate was about 63%. So 63% of this group are in the green box. So what makes a person fall into this 96 million people that are in the gray area, or the other 37%? Well, there are a few things that put them there. The most popular version, and one that we might have all heard, is that if people can't find a job and they give up looking, this is where they end up. And this is actually true. We're only considered to be part of the labor force if we have looked for a job in the past 4 weeks. But there are not 96 million people that they couldn't find a job and walked away. So this gray box also includes anyone who's retired. Let's say you're 17 and you're in high school and you don't have a job, or you're in college and you don't have a job. Well, they don't count towards the labor force either. Or if you're a stay-at-home mom or dad, they're not in the labor force. But ultimately, it's the biggest one in this group is retired people. So if you're retired, you don't count towards the labor force, and to me, this makes sense. Okay, so now we have the civilian labor force. Now, these are in theory the people that can work, want to work, and are able to work, and either have a job or are unemployed. Now, the question is, how do they define unemployed? And the Bureau of Labor Statistics, or BLS for short, they actually have a series of numbers for this. And they start with the smallest, and then they gradually broaden it. We'll start with the smallest as well, and they call that the U1 unemployment rate. And the most recent number for the U1 unemployment number was 1.5%. Now, all of these numbers that I'm using are not seasonally adjusted. You may see slightly different numbers where they adjust for seasonal employees. Now, I'm just using numbers straight from the BLS. So this is anybody who has been out of work for more than 15 weeks and is currently looking for work. Then we have the U2 unemployment rate. This is right now the number's at 1.9%, and basically it takes everything from the U1 unemployment rate and adds people who had recently completed temporary jobs. Then comes the U3 unemployment rate. Now this is the unemployment rate that we hear a lot about. This is the most popular one. This is the one you're going to see quoted all the time. Right now it's sitting at about 3.8%. And this number takes U2, which already includes U1 in it, and then they broadly define unemployed as anybody who is jobless and actively seeking employment. So as we can see, this box just keeps getting broader. Then we have the U4 unemployment rate. This rate is sitting at 4.2%. And this is where discouraged workers are counted. And the BLS defines discouraged workers as somebody who wants to work, can work, and they have searched for a job in the past 12 months. But they're not in the U3 unemployment rate because they have not searched for a job in the past 4 weeks. Now, technically, discouraged workers are not a part of the labor force, as we mentioned before. But if you're curious, the U4 unemployment rate does in fact look at these numbers. Then the U5 unemployment rate, which is currently about 4.7%, well, this takes into account everything from U4, and then it expands upon it to basically include what they call marginally attached workers. Now, a marginally attached worker is just like a discouraged worker, except they have reasons not to search for a job other than they didn't think any jobs were available. Then our final number is the U6 unemployment rate. Right now, U6 sits at about 7.5%. The U6 unemployment rate includes everything from U5 and workers who are part-time workers for economic reasons. Basically, that means that they want a full-time job, but they had to settle for a part-time job because they needed the work, any work. So many people believe that this is a more accurate perspective of unemployment, and I tend to agree with them. So that is the truth about the unemployment rate. And although I would agree that the U3 number probably isn't the best number to use, it doesn't make all unemployment rates garbage. So when people say that unemployment doesn't include people from this group or that group, they could be right, especially if they're talking about the U3 number, but it's likely that that group is represented in one of either U1 to U6 or the participation rate. So you might ask, if U3 isn't the best number to use, why did I show a chart of it at the beginning of the video? Well, I have two answers to that question. First, it's the most popular version of the unemployment number, so the data is the easiest to get and to build charts. Then, this is a chart of all 6 of the unemployment numbers. And as we can see, they tend to move very similar to each other. So I believe that going with the U3 rate is perfectly acceptable since it's the trend we're ultimately after. Now, there are 2 final points that I think are important. Believe it or not, people who collect unemployment don't factor into any of these numbers. Well, the people factor into the numbers, but the fact that they collect unemployment does not. So if somebody is collecting unemployment and then let's say that unemployment runs out, well, they will still be counted towards at least one of these numbers as long as they keep looking for a job. Then the final thing that I think is a fair criticism of the unemployment rate is how it is calculated. So it's calculated by surveys each month by the Bureau of Labor Statistics. And basically they survey about 60,000 households, which is estimated to be about 110,000 people each month. To me, this implies that there is a serious amount of room for sampling error. But until a better way is devised, it seems that the current unemployment rate can at least give us the trend that we're looking for. So which unemployment number do you think is most accurate, if any? Let me know what you think in the comments below. And if you happen to know anybody who believes that the unemployment rate is completely fake, maybe you can go ahead and share this video with them. I'd be curious to hear their feedback. So if you have any questions or comments or thoughts or anything at all, leave them in the comments below. Thank you for sticking with me all the way to the end of the video, and I'll see you in the next video. Thanks.